Hello, I'm Pete Hendrickson. In 2003, I wrote a book called Cracking the Code, The Fascinating Truth About Taxation in America. It's about the income tax mostly, focusing on three different aspects of that tax. The first part of Cracking the Code concerns itself with what it is that actually qualifies as the income that is taxed under the law. The fact is, income under the law doesn't mean money or earnings or receipts. Although in everyday language we use the word income to mean all that comes in, under the tax law, income is a legal term with a much more narrow meaning. Very simply put, income under the tax law means gainful activity involving the federal government, either as a federal office holder, a federal worker, an investor in federal entities, or as a recipient of federal benefits. The activity is what is actually taxed, but the amount of that activity is measured by the resulting gain. Thus, the language of the law generally adopts the convenient shorthand of referring to that particular variety of gain, which is generally denominated in dollars, as itself being the income taxed under the law. This is one of the primary reasons for people confusing the meaning of income in the income tax with money. When it appears that those subject to the tax are being taxed for receiving money, it is easy to make the mistake of concluding that everyone making money is thus subject to the tax. But this is not the case. The fact is, most people don't receive any income at all, or receive very little, as that term is meant in the law. Still, somehow we all get treated by the IRS and state and local tax agencies as though every penny we receive is income. The reason for that, and how to stop it, is the focus of the second part of Cracking the Code, in which the reader learns that due to a generations-old practice rooted in a common misunderstanding of the rather complicated body of law that has grown up around the income tax, virtually every payment made by one American to anyone else is accompanied by the creation of a legal document, technically known as an information return. You know these legal documents as W-2s, 1099s, and K-1s, mostly. These information returns are intended to be used only for reporting payments of income, not mere payments of money, and the laws dictating their use say so plainly. However, even just the condensed representation of the tax laws that we call the Internal Revenue Code is well over 3 million words long, and I believe I can safely say that practically no one issuing information returns has ever read all the laws associated with those documents. Indeed, very few have read any of those laws. Instead, most payers issue those documents for every payment made because they don't know the meaning and effect of what they are doing, and because they have been trained to do so by the IRS, which has a long history of presenting Americans with carefully selected excerpts of the law, intended to conceal both the legal effect of instruments such as information returns and the general limitations of the income tax. That this is done will surprise none but the most naive. After all, the mission of that agency, like that of all tax agencies, is to maximize revenue. Period. Further, under our legal system, the responsibility for knowing the legal effect of a tax-related instrument rests on the one signing that instrument, not on the tax agency, even when that agency has an incentive to mislead. Despite the fact that most information returns are created in ignorance of their import, they will nonetheless be taken by tax agencies as concrete evidence that the payment reported on them was a payment of income. That is, these information returns will be taken as deliberate testimony that the reported amount of money paid was paid as a consequence of the recipient engaging in a taxable activity. Tax agencies will vigorously attempt to frighten or fool those about whom these information returns are created into adopting that testimony on their own tax returns and accepting the resulting tax liabilities. Or the agencies will independently seek to collect money based on this information return testimony. You'd think there would be a law against creating false information returns, and in fact, there are several. The most important of these is the commandment by which we are instructed to not bear false witness against our neighbor at any time or about anything. There are also a number of man-made laws specifically aimed at the creation of false information returns. I'm sorry to say that they are rarely enforced. This isn't surprising when you consider that the prosecutors work for the same branch of government as the tax agency that encourages widespread misunderstanding about these legal instruments and their effects, the consequences of which are the presumptions of tax liabilities which otherwise wouldn't exist, and a river of money flowing into the Treasury. Of course, the prosecutors have their excuses. For example, in order to punish someone for creating a false information return, there has to be a complaining victim, which is to say, someone who knows that the information returns created about him are false, and how they will work against his interests. Since the campaign to keep Americans in the dark about these things is so mature and effective, there have been very few victims filing complaints. This is not an excuse a lax prosecutor would probably be comfortable explaining to his mother, I suspect, unless his mother is Ma Barker. However, there is another, more honorable excuse available to a government prosecutor wanting to ease his conscience about standing by while false information returns flood the mail from January to April every year. Acknowledging the basic principle of due process, that all evidence is subject to rebuttal and correction, and that without an alternative the courts would be perpetually clogged with lawsuits and prosecutions, Congress has made statutory provisions by which Americans victimized by false information returns can fix the situation all on their own. Those provisions are also covered in the second part of Cracking the Code. Readers of Cracking the Code, The Fascinating Truth About Taxation in America, have been acting for some time now on their newfound understanding of what is really subject to the income tax, the meaning and effect of information returns, and the statutory provisions Congress has made for victims of false testimony. What you're about to see is a sampling of what that has meant to these good folks. As you view the following images, please understand that, although the subject is too large to be properly addressed in this short film, there is a reason why the income tax is limited in the way that it is, and why Congress has provided the corrective mechanisms in the law that I have mentioned. Very briefly put, it is because those who framed the Constitution intended for the people to retain direct personal control of their earnings and wealth. The founders made constitutional provisions to that effect, and the income tax fully conforms to those provisions and that purpose. It is only the carefully cultivated ignorance of the law's details that has allowed this truly benign and lawful tax to take on the characteristics of the voracious monster that most Americans imagine it to be today. This most important aspect of the income tax story is the focus of the third part of Cracking the Code. More on that must be left to the reading of the book. In the meantime, here is what can be accomplished by those who know the truth. Those who have not engaged in a taxable activity, or have not done so to the extent of gains beyond the statutory exemption amount, generally owe no income taxes for the relevant period, regardless of the amount of money earned. In such cases, knowledgeably acting to correct any erroneous information return allegations about one's earnings establishes that fact legally. In most cases in which money has been withheld or paid in, or is available as a credit from a previous year, knowledgeably correcting erroneous information return allegations and presenting an appropriate claim establishes legally that everything withheld or paid in is to be refunded. And I mean everything. Social Security and Medicare contributions included. What you're seeing right now are refunds secured by readers of Cracking the Code, thanks to corrections and claims submitted over the last 18 months or so. Some of these thoroughly educated Americans have secured as many as a dozen such refunds so far. Also displayed here are Treasury Department transcripts showing zero balances for readers' accounts, levy releases, garnished money reimbursements, notice of deficiency closing notices, and every other kind of beneficial consequence that can result from a complete knowledge of the Internal Revenue laws. The more than $1 million in recovered and retained property shown here has returned to, or remained in, the pockets of Americans from all walks of life, including teachers and truckers, doctors and lawyers, nurses, engineers, CPAs, students, etc. And what is displayed here is just the tip of the iceberg. Only a fraction of the readers of Cracking the Code who have recovered property withheld against the possibility of tax liabilities which did not actually exist have generously furnished me with images of their checks and other documents for posting, both here and on my website, losthorizons.com. Many more have reported their successes in knowledgeably invoking the law, but didn't think to scan the resulting checks and notices. Many more still have doubtless enjoyed similar successes, but not communicated the fact to me at all. There are, after all, many thousands of copies of Cracking the Code in circulation now. The book is currently in its 6th printing. Copies can be found in libraries around the country. Cracking the Code is even being read in Australia, Eastern Europe, Canada, and Japan. LostHorizons.com logs more than 1.2 million Cracking the Code related hits each and every month. The refunds you're viewing range in size from as much as $75,150 down to as little as $1, which actually began as a 70-cent claim, but was rounded up under the rules of the state tax agency to which it was submitted. That little check, and the many other very modest refunds on display here, illustrate a very important aspect of this whole subject, which is that those who act on their new knowledge of what the law really says and means, and why it says and means what it does, are not acting for the sake of the money. They are acting on behalf of the rule of law, and in the understanding that the framers of our federal Constitution expressly intended that the government they created not be provided with the kind of open spigot of revenue into the Treasury which general ignorance, or apathy, regarding the truth about the income tax represents. The framers laid down rules by which the federal government is perfectly capable of financing any expense, whether of necessity or frivolity, but only by means of politically accountable and politically responsive processes. These processes include apportioned direct taxes, suitable and historically called upon for the financing of rare calamitous expenditures, such as become necessary as a consequence of war or natural disasters, as well as revenue tariffs and similar excises for the financing of routine, ongoing federal operations. On the other hand, income taxation in the manner that has become the current reality for Americans who remain ignorant of the relevant law's details was specifically prohibited by the framers, and remains constitutionally prohibited to this day. Readers of Cracking the Code act out of respect for the framers' intentions, to uphold the basic principle that property belongs to he who creates or earns it, and to enforce the simple fact that, under our system of government, and any proper system of government, the people are not subjects, to be tapped for revenue at the government's pleasure, with only a choice of rulers every now and then. It will come as no surprise to you, having seen what you have seen, and having learned what you have learned watching this film so far, that the IRS has been vigorously trying to suppress Cracking the Code, and to discourage those who read the book from acting on their new knowledge, since the very moment the book first became available in August of 2003. Repeated efforts to have the book ordered off the market by federal judges have been defeated already, but that hasn't discouraged the tax agency, which recognizes what this book means to its long-standing control over a huge percentage of the earnings and wealth of most Americans. Even now, and even while quietly continuing to issue refunds and otherwise honor the filings of Cracking the Code readers every week year-round, the IRS is engaged in a massive public relations blitz attacking the book and me personally. In fact, the agency has gone so far as to launch a highly publicized, but utterly bizarre, lawsuit against my wife and me, in which it is arguing that refunds made to us for 2002 and 2003 were issued in error, and the agency wants our money back in its hands, despite the fact that the official Department of Treasury certificates of assessment for those years declare that no tax was, or is, due. That this lawsuit is no more than a publicity stunt is further emphasized by the fact that the IRS and state and local tax agencies continue to make precisely the same kind of refunds to Americans all across the country, day in and day out, without interruption. Details about these turn-back-the-tide efforts to preserve the ignorance of the law by which the agency, and its clients, have benefited so handsomely for decades now can be found at losthorizons.com. I'm going to close this film with a few comments by readers of Cracking the Code, whose ranks I hope you'll choose to join. I especially hope that, after you read the book, you'll also choose to join us in standing up for the rule of law, by insisting that your servant governments abandon their long-standing efforts to encourage and exploit ignorance about the true nature of the income tax. Thank you for your time.